The Case-Shiller and FHFA home price indices showed renewed home price appreciation in March, but the lack of recent progress on inflation kept the Fed on hold yet again. What does that mean for you as a home buyer or a home seller? Hi, I'm Shemeika Fox, your Santa Cruz Real Estate expert and your personalized real estate concierge, and hopefully this gives a little insight on what that means for you in today's real estate markets. The Feds are on hold for what feels like forever. At its May 1st meeting, the FMOC, or the Federal Open Markets Committee, voted to keep short-term rates steady at 525 to 550 basis points. The last time the Fed raised rates was July 2023. Relief rally for bonds. The clearest sign of how much things have changed is that bond prices rally because Chairman Jerome Powell said it was unlikely that the Fed would raise rates again. Despite this nice move, the Fed funds future market is still implying that rate cuts won't start until November. Slower than seasonal rent growth, national median rents rose 0.5% in April. That looks like a big number, but it's slower growth than you'd normally expect in spring. The near record supply of new apartments is the double dip over. Case-Shiller's National Home Price Index rose 0.4% month over month in February 2024. That's up from 0.3% month over month in January 2024. And only one city, Tampa, saw prices fall month over month on a seasonally adjusted basis in February, down from 8 cities showing declines in January. FHFA index was even stronger. The FHFA's National Home Price Index rose 1.2% month over month in February, up from a modest 0.1 decline in January 24. That was the highest monthly price appreciation since April 22. All 9 regions posted month over month growth. The New England region saw prices rise incredible 3% month over month. Consumer confidence weakens. The Conference Board's Consumer Confidence Index came in at 97, the lowest figure since July of 22. Consumers became less positive about the current labor market situation and more concerned about future business conditions, job availability, and income. A mixed picture from jobs week so far, nothing shocking from the job openings and labor turnover survey for April showed that total job openings declined 4% month over month to 8,448,000. That's the lowest figure since March 21. But strong job growth from ADP, the private sector, added 192,000 jobs in April, down slightly from the upwardly revised 208,000 jobs added in March. This was the 4th straight month that the 3-month moving average for job additions increased. The annual pay increase for job stayers eased slightly, while the annual pay increase for job leavers reversed part of the huge gain seen in March. BLS jobs report preview. The extremely important BLS jobs report for April will come out on Friday morning. The street is looking for a 243,000 increase in jobs, with the unemployment rate flat at 3.8%. Hottest housing markets for March, where homes are seeing the most online interest and selling the fastest. The Northeast, the Midwest continue to dominate. The top 5 were Manchester, Rochester, Springfield, Worcester, and Concord. Politicians coming after mega landlords. Legislation has been proposed at both the federal and state level that would force large corporate owners of single-family homes, such as BlackRock and Invitation Homes, to sell to individual family buyers. On the Case-Shiller again is the double dip over. The very strong February data from Case-Shiller suggests that it is. For the first few months, I've been highlighting the rising number of big 20 cities indexes that were experiencing month-over-month declines on a seasonally adjusted basis. In January 2024, 8 out of 20 cities indexes declined, up from 6 in December 23 and 5 in November of 23. That all changed with the February 24 data. Only one city, Tampa, saw a month-over-month decline, and 14 out of 20 showed an improvement in February versus January. Some city indexes saw a huge turnaround, like Seattle, from January to February, it increased 1%. Overall, the Case-Shiller National Home Price Index rose 0.4% month over month in February, higher than 0.3% month over month in January compared to last year. The price index was up 6.4% year over year in February, stronger than 6% year over year in January. So, is year over year price growth accelerating? Well, not really. Recall the home prices peaked in mid-2022 and then bottomed around January to February 23. In other words, year-over-year comparisons will get tougher from here. Still, the national index is already up 0.7% year-to-date, which is 4.3% annualized, and that's after the Case-Shiller National Index rose 5.7% in 22 and 5.6% in 22. Home prices up nearly 16% in the 3 years, even after the pandemic-driven 19% spike in 21. Like Darth Vader said, impressive, most impressive. An important caveat, this all sounds very rosy for home owners, that is, but keep in mind that there are still 7 big 20 city indexes that are below their mid-22 peak. It's been a slow 2-year road to recovery for cities like San Francisco, Seattle, and Portland. Building concentration, it all starts with supply. With existing home inventory constrained by the locked-in effect, we really need the construction industry to fill the gap and begin addressing more than a decade of unbuilding relative to household growth. The problem, as I see it, is that the new home construction industry has become very concentrated, and 90% of the 10 are listed companies. I decided to update my analysis from early last year, and here's what I found. The top 10 builders generated 42% of the new home sales in 2023, and 9 out of 10 were listed. The top 20 builders generated 52% of the new home sales in 2023, and 15 out of 20 were listed. A decade earlier, the top 10 was 25% of new home sales. The top 20 was 33%. These national mega builders like D.R. Horton, Lennar, Pulte, NVR, Meritage, etc., benefit from access to capital economies of scale in land purchase, materials sourcing, and ability to offer attractive financing plans such as rate buydowns, etc. The management of listed companies have a responsibility to increase shareholder value, which generally means growing earnings, more projects, higher prices, cutting costs, better margins. Listed companies homes more affordable for the first-time buyers or to solve our nation's housing shortage by building tens of thousands of cheaper homes. How do you try to smooth revenues and earnings when you know you're in a highly cyclical industry? You don't go for broke when times are good. You de-risk by selling a big chunk of homes to mega landlords. We need more new homes. It is wild that we sold 25% fewer new homes in 2023 than we did in 2000. We can blame it on local government regulations or insufficient skilled labor. That's who builders blame, or greedy builders, or mega landlords. That's who people and the politicians blame. The reality is that you can't have 50% plus concentration in an industry that delivers something as important as new homes and have 75% of the top 20 be listed. Mortgage market updates. Over the course of April, average 30-year mortgage rates moved up 68 basis points, or 68%, and exceeded 7.5% on the 3 occasions. There was nothing in the jobs data this week so far to suggest that the labor market was loosening up, and as expected, the Fed kept rates on hold again. 2 bits of good news. From the Fed meeting, however, 1, Jerome Powell said it was unlikely that the next policy move would be to raise rates, and 2, the Fed's quantitative tightening, QT, or tapering program will slow significantly. In other words, they will taper the tapering. So we're hovering between 7.4 and 7.5% for the average 30-year mortgage rates. Of course, this could change today if the big April BLS jobs report delivers 243,000 job gains. Current odds on Fed rate cuts at upcoming FOMC meetings, June 12th, 9% steady for last week. July 31st, 28% down from 32% last week. September 18th, 54% down from 59% last week. November 7th, 67%. They said it. Home sales have lingered at 30-year lows, and since 70 million more Americans live in the country now compared to 3 decades ago, it's inevitable that sales will rise in coming years. Inventory will grow steadily from more home construction, and various life-changing events will require people to trade up, trade down, or move to another location. That's from Lawrence Yun, National Association of Realtors, Chief Economist. Now, let's take up the Santa Cruz housing numbers for April 2024. The median sales price for single-family homes in April of 2024 throughout the county of Santa Cruz is up very slightly from last month, March, when the median sales price for single-family homes was $1,315,000. The March median sales price for single-family homes in Santa Cruz came in at, the April median came in at $1,362,500. The average days on market is down from 35 days on the market to 33 days on the market, which means prices are going up and time to sell is coming down, showing a strong seller's market. The number of active listings in April is up to 282, showing a slight increase from 210 in March. The number of new listings for April came in at 209, which means we saw an increase of an additional 46 new listings hitting the Santa Cruz real estate market, a welcome increase for all of those home buyers looking to buy a home. And the number of closed sales came in at 124 in April, which is up 34 more closed sales from March 2024. The sales price to list price ratio for single family homes came in at 100.1%. And we are at 2.3 months of inventory, meaning if no other properties came on the market, our Santa Cruz housing inventory based on today's buyer demand would be sold out in 2.3 months. A neutral market, meaning equality between buyers and sellers, is 6 months of inventory, and we are not there yet. Now let's look at the Santa Cruz stats for condos and townhomes right here in Santa Cruz, and this is the entire Santa Cruz County. The median sales price for April 2024 came in at $857,500, which is up from the median sales price in March of 2024, which was $720,000. The average days on market came in at 31 days, showing an increase of a mere 1 day of market time from March 2024, when the average days on market was for condos and townhomes in Santa Cruz was 30 days on the market. The number of active listings in April 2024 was 65, which showed an increase from 51 in March, and the number of sold condos and townhomes was up from 28 in March 2024 to 36. Santa Cruz condos and townhomes that sold in April 2024, the number of new listings for condos and townhomes right here in Santa Cruz was up significantly from 34 in March to 61 in April. The sales price to list price ratio came in at 99.8%, just scraping below that 100% mark and down slightly from March 2024, when the sales price to list price ratio was 100.1%. And our months of inventory for April 2024 came in at 1.8 months, again indicating a very strong seller's market. As always, thank you for tuning in. I think if you're thinking about buying or selling a home right here in Santa Cruz, or if you have any questions about the Santa Cruz real estate market and how it will affect your dreams of home ownership, please feel free to reach out. I'm Shemeika Fox, your Santa Cruz real estate expert and your personalized real estate concierge. And as always, I'm here to help. The Case-Shiller and FHFA home price indices showed renewed home price appreciation